2025. Unbelievable. Halfway through May. Incredible. And what is happening in the old Bitcoin and altcoin space? Well, as I told you yesterday, all the big hypesters were out there telling you, "Oh, big picture, this is going to 150, 200, a quarter of a million, 500, whatever the crazy numbers are, right?" All of those crazy high time frame predictions, how do they help you yesterday in your trade? Because it was going up a tiny little bit and then plummeting down the whole time the rest of the day, like, ranging down. How'd that help you? No, it didn't. And then you got that tiny little movement back up at the end of the day. That didn't help you? Right. How'd that help your highly over leveraged trade yesterday? Did it get you wrecked? Right? Because that's typically what happens, right? Is that these big narrative storytellers with relatively large channels will get you all hyped up on the high time frames and what is likely to happen. What they say is likely to happen 6 months or a year or 5 years from now. It's completely irrelevant if you're trading on the day. But it's easy for you to fall into that and believe, oh, well, he says he's going to go up now, and it fits the high time narrative. So if I just enter here, I can just buy and forget. And then you come back 6 hours later because you're not looking at the charts and you're in a massive loss or you're even wrecked. Right? It happens so regularly, there's a name for it. Right? And that name is dumb money, if you're not aware. If you're using Voodoo TA, if you're using what they call traditional TA, traditional technical analysis, which is what I call Voodoo TA, because that's really what it is. You are, in fact, considered by the people who move the markets, who actually move the markets, and the people who run the high frequency trading firm bots, right, who run more than 80 to 90% of all trades on all assets, on all markets, on all time frames, like those people, the so-called smart money, because they always seem to be making money from the market and not losing money to the market, right? They call you the dumb money. They call you the dumb money. How's that feel? And they say it openly. And in fact, retail traders proudly call themselves the dumb money because they know they are. They know they're gambling. They know that they're taking a shot in the dark because they know they don't actually have leading information. They don't know that the term is leading information or what they're looking for, but they do know that they're using lagging information. They will tell you, yeah, this is lagging information. This indicator lags. Right? They know. Price action itself is lagging information. Did you know that? Price action is not determined by you putting in your bid and running the order. That's not how price action is determined. You might think it is, but it's not. When you enter an order on the market, whether it's a buy or a sell, guess what? Your order goes into the queue of orders, right? It goes into the order queue. Inside of what? The order book. That's right. So in order to get your order processed, your order has to get to the front of the line, which sometimes can take, it can be practically instant. Sometimes can take many instances, seconds or even longer. And sometimes your order doesn't get filled because the price will run away from you in one direction or the other. And then you wonder to yourself, should I chase the price? The answer is no. Usually the answer is no. There are very few exceptions to that. And certainly if you're using leverage, the answer is no. Because it can make a move up, and then you enter it thinking it's going to keep going up, and it just turns around and goes down, right? Because it already made the move up. And you're thinking, oh, it's going to go up more. Well, you misread the information, right? How many candles have been going up on that time frame, right? How long has it been doing this? At what point in the move up did you get in? Did you get in right at the very beginning of the move up? Or did you wait to be cautious and wait until it gave you certain information, you know? Did you wait for it to cross the AVQ mean? Did you wait for the trending move to be in full effect, or did you front run it while it was still expanding? Right? If you're using lagging information, of course, none of that is even relevant because you have no idea what you're doing. You're using lagging information. Right? You may as well not trade. You may as well throw a dart at the wall with your eyes blindfolded and hope that you hit the target. But you probably won't, you know. Especially not if you spin around a few times before you do it. And that's basically what trading with Voodoo TA is. You know? Again, I don't say this to denigrate Voodoo TA traders. I really don't. I'm just telling you the facts. Right? I'm not here to be patronizing or anything like that to Voodoo TA traders. The reason I call it Voodoo TA is because it really is a form of voodoo in the sense of you're using a whole bunch of silly woo stuff like Fibonacci's. Fibonacci's are great in nature, in art, in all kinds of stuff, in fashion and design. Fibonacci's are wonderful, right? But when it comes to trading, they are completely irrelevant. Completely irrelevant, okay? If you think there's such a thing as a golden pocket in trading, that's not how big bots operate. They don't. You think they seriously program multi-billion-dollar bots, like bots that have cost them hundreds of millions, if not billions of dollars at this point, to build, maintain, operate, you know, to staff them, to fix them constantly, to do whatever they got to do. You think they're literally running Fibonacci's on those things, or do you think they're running algorithms that calculate the maths that matter, like the means of returns, you know, the returns themselves, the standard deviation of returns, which is volatility, the spread of data around the mean, which is variance, which is another word for volatility, the entropy, whether or not the asset is in a trending move or a random walk, right? What do you think they're looking at? Those are things you can measure. Those are things that bots can measure extremely quickly and take action on extremely quickly, like in millionths of a second, right? Fibonacci is trying to sit there and analyze, oh, should I put the Fibonacci from this pixel or the next one? Like it's subjective nonsense. It has nothing to do with the actual maths. Because what if you're off by a few pixels? It changes the maths, right? And, you know, so that would change your levels and all that. It would change your calculus. It would change everything that you're doing. That's why bots run on maths, not magic, right? That's why bots don't trade patterns. They trade maths, right? They just do. And specifically, the master trader are the VEPs, right? Just like we trade. They don't necessarily call it that. They didn't come up with that cute acronym like we did. Yeah, we trade the VEPs, 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 right? Well, why do we come up with that cute acronym? Because those are the four main things that you need to know how to trade when you're trading. If you don't want to consistently lose money like 99% of the retail market, which again are called the dumb money. The key to this whole thing, I mean, it is so vital that you understand, right? Don't over leverage your positions. get in and get out of trades. Take profits early and often, as they say. Like if you see you're in a trade, let's say you're trading whatever, the 6 minute, okay? You enter a trade and it hits your target and it continues to go in that direction. And you think to yourself, wow, I'm just going to let it ride. If it hit your target, you should take profit. If it happens to go a bit beyond that by the time you take your profit, great. But you should take your profit because you can always re-enter the trade. And when you do re-enter the trade, right, you will have more capital in your bag than you did at the beginning of the trade. Versus if you let it take away some of that profit, as long as you exit profitably, you will still have more capital than you did at the beginning of the last trade, but you won't have as much as if you hit your target. And more importantly, you won't have hit your target. You'll have let the market take it away from you just because you wanted to wait, because you were confident that it would just continue. Well, assets don't just continually run in one direction. There are constantly distributions and mean reversions. Constantly. Right? And if you think there's a lot of them on the 15-minute time frame, look at the 3-minute, look at the 1-minute, look at the 30-second. Hell, look at the 1/1,000,000th of a second, which is what calculations are being done by these massive bots. Their average trade lasts 0.2 seconds. And that was like 8 years ago. Right? It's for sure down to like 0.1 seconds now. Why? Because they have more significant position sizes. These capital management firms have only gotten bigger and bigger over the years. And the way these HFT firms have been growing, the successful ones, yeah, they can make trades that last 0.1 seconds and make a profit because all they need to do is move the needle a tiny bit. One little tick, it doesn't matter. If you move the needle one tick, take your profit. Go to the next trade, move the needle one tick, take your profit. And you do that with a bot that executes millions of trades per second. Of course, and they have significant sizes on all of their positions. They're not a small fish in any position. Right? Now, to them, they might think, oh yeah, these are small positions because they're used to dealing with massive positions. But to you, their small position is probably bigger than any position you will ever run in your life. Right? Again, yes, of course, the traders who are working at the HFT firms don't each own all of the money they're trading. No, they're trading the firm's money. The money of the firm is being used by the traders that they employ to trade their money, and they're expected to bring returns. And if they don't bring returns on investment at the end of the year or the quarter or whatever, they're let go, right? And the younger they are, the newer they are, the faster they're let go typically. Once they pass a certain threshold, then yeah, they can last a year until their next annual review or whatever, as long as they don't do something massive like lose 30% in a day or something crazy, right? But HFT firm traders don't do that kind of thing because they're running trades at tiny amounts of time, right? So they have no reason to be losing such significant amounts of money. They're literally moving the needle one tick. If it goes in their favor one tick, because they're usually moving the market in that direction, they just take their profit. If for some reason they're entering a trade at the same time as a competitor going the other way, and it goes the other way because their competitor has a bigger bag, okay, so then they lose that trade. They go to the next one. They lost a tick. They didn't lose a massive position, right? They don't just sit there and say, oh no, the trade is going against me. What should I do? No. They enter their position. It moves a tick. They get out of their position. Doesn't matter which direction it goes, with them or against them, they get out of the position. take their profits early and often. They limit their loss, and they're not emotionally attached to their trades. And remember, they're not manually running their trades, right? They're running their trades automatically through quantitative algorithms. So bear that in mind. Anyway, I just wanted to make sure you guys all knew that. I love these purple flowers. I love these purple flowers that fall all over the floor at this time of year. It's a very nice tree. Anyway, yeah, the flower grows on a very pretty tree that sheds every year in the middle of spring, late spring, and then you get all these beautiful purple flowers all over the place. They also have orange ones. I forget the names of these things, but they're nice trees. Ah, yes, the sound of construction. Nothing quite like it. The sound of construction sites. Anyway, I wish you all a very wonderful day. And I hope you all have a wonderful Thursday and happy trading. Stay safe with your funds. Don't take on any risk that you can't manage. Because at the end of the day, it's just not worth it. Right? It's just not worth it. Right? If you want to learn how to trade properly, you can, of course, go to Alpha Trading. We will show you how to trade properly, completely for free, and teach you for free. And hello, tiny little kitten. Hello, other kitten. Wow, the kittens everywhere. Hello, fight knockers. Must be